Welcome to the Precision Trader. In this week's educational video, just want to covered some live trading that we did today using the number one indicator that exists, in my opinion, that is a Bookmap. Again, this is an order book that allows you to see where the majority of buyers and sellers are sitting in the market, looking to be filled. And it's done for us in a nice heat map here. Anywhere we see these nice thick orange and red levels signifies a lot of people looking to buy and sell in that area. So we know that it's very significant. So just want to show you one of the strategies. We've got three really nice Bookmap strategies that we use to take advantage of this very powerful indicator. And also too, I'll cover some of the other indicators we have in our indicator course on the left side here on the chart. So anyway, so we can have a good, well-rounded understanding of what we're looking at and what to expect. So with that said, also too, I'll show you how to scan for stocks at the end of the video. Towards the end of the video, I'll show you how to scan for these stocks. So so you could have found this, because again, it doesn't do you any good if you can't find these stocks intraday. So so keep that in mind. Also too, at the end, I'll have a portion for ones in the server where I'm going to go over the SPY ES and just cover just some of the things that you could have looked at and taken advantage of, because we know SPY ES turns the market. So understanding it, being able to predict it with a high probability of success is extremely valuable. So with that said, jump into our stock that we played today, in phase. Now, I would love to tell you that we grabbed it. I scanned early enough this morning. I was lazy on the scan, and it was probably, let me see, 40 to 50 minutes into the day before I did my first scan, because I was talking and we were playing other stuff in our live trading chat Discord. So anyway, with that said, I missed this initial run up here. All right. Now, with this strategy, we're playing the short scalp strategy at major liquidity. Okay, this is probably, this is my favorite of the strategy, the three Bookmap strategies. So it's pretty simple. You're simply scrolling this in right here, getting on the $5 increments, okay? Because anything you can see on the $5 increments represents major liquidity. Okay, a lot of people, they zoom into Bookmap too much and they start focusing on these little layers of liquidity. Again, that stuff, the stocks can just blast through that in no time. Whenever you get to these major levels, stuff that you can see on $5 increments right here. So $5 increments, you can see that orange and red very visible. So you know that 310 is a monster level, really 310 to 312. So with that said, zooming back in, we see the stock starts pushing to start the day. And then again, where does the market, because a lot of people say, okay, what good is it to know where all these orders are? Because the market loves to gravitate to large levels of liquidity. It acts as a tractor beam. It's it's a gravitational pull on the price of the stock. So again, when we see monster levels, we know that there's a very good chance the market wants to push to those levels. And then when they push to those, especially the levels above, on our short scalping strategy at major liquidity, your probabilities of a dump on that area, you're looking at 99% win rates. Now, again, it depends on how much you're trying to profit off of that. But if you're looking for something in the $1 to $2 range, or even the $2 to $5 range, you can, you will be in that 90-something percentile as far as probabilities here. So again, I got hundreds and hundreds of trades, entries and exits with this strategy in the server. You can go check them out. So again, it's extremely powerful. Again, if somebody just said, hey, just give me one strategy in the market, super easy, I can make money very easily. Bam, this is it. So anyway, like I said, we got more, but like I said, if I just had somebody that just wanted to be just super, again, a child can follow this. Oh, okay, so I find where the big, okay, I zoom in here, I see where it is, $5 increments. Okay, I can see orange and red, a big orange and red band here. Okay, all right, so when it gets here, I'm going to short it. When other people are taking their profit, because that's what's taking place here, they're taking their profit, I'm going to be, shorting alongside with them, so we can both make profit. So with that said, we see the morning starts blast straight up, and where is it heading? heading up here to 310. Now, when it gets to 310, what do we have? What happens? Bam, it proceeds to dump straight back to 305. It might have dipped in, even dipped in 304s. So 310 back to 304 in a heartbeat. So again, extremely good money. Now, what happens here? We see buyers come in there that bam, tongue twister. They blast it straight back up. And this time what happens is they get to the 310 liquidity and they're actually able to push through. All right. So this is second retest. They push through. More liquidity comes in at 312. Bam. They blast it, knock it back down. Now, what makes this guaranteed money, especially because again, this is another one of our strategies, the push through strategy. Love to see this. When we get a push through on major liquidity like we have here and they don't come back and retest it, it is not a matter of if they're going to, it is when they're going to come back and retest this. So in this case, they came back and retested, this 310 major liquidity. Didn't take them long at all. And they eventually end up dumping all the way to 305. So again, we took advantage of this one in the voice chat. Again, I found it a little late. It was about right here, 309 when I found it. I told ones in the server, I said, hey, the probabilities of this going back to 300, 301 is extremely high. It's not a matter of if, it's when it goes back there. Because again, it never showed any respect. Came back and retested the 300 or the 301 algo. So we look over here on our chart. Look at what happened for the morning. We come up, we blast up, and then we blast through this major 300 liquidity, and we blast through a major algo here. Again, our algos are an indicator that automatically populates on our charts every single day for us. And again, this is levels where institutions, computers are buying and selling at these calculated areas. Okay, so again, do we know every area that Goldman Sachs is calculating, what their computers and stuff is? No, we don't. But we got 3 really good ones. So with that said, when I see it blast through a key algo and a major liquidity, I know it is guaranteed to come back to this spot. So when I was telling ones in the voice chat, when it's sitting up there at 309 and 310, hey, this thing is guaranteed. Some of the new ones this morning, they might not have believed me, but as you can see, it dumped straight back. And where did it come down to? Right to that algo, to almost to the penny. And then whenever it gets there, what do they proceed to do? They proceed to buy this thing back up, and they rocket it straight back up to the 310, 312 liquidity that came right back in the book. Now, when it got here this time, we definitely took advantage of it on the play call outs. So again, the first time took advantage of it in voice chat. I didn't feel comfortable getting it, lagging. Again, I like to send plays out before, give you at least 5 minutes or so before it gets to that level, so you have enough time to react. So when I sent this one out, somewhere around 308, 309, somewhere in this area, and I sent out the short for 311, 312. Now you might say, why didn't you send it out for to send it, short at 310? Well, again, this was the third retest on this level. And I know the more that a major liquidity gets tested, the more likely they are to absorb and push through. So again, in this instance, we played the push through strategy. We played the expectation that it was going to get to the major level, push through it, and then need to come back and retest 310 at least. So in this case, pulled back all the way to 308. So I encourage ones that I was keeping a runner for this 308 area right here. And why was I keeping runners for the 307 to 308 area? Because I know I had 2 algos sitting right here in this area. So I didn't want to mess with them because, like I said, take your profit. Don't get greedy. This thing was very volatile, so we didn't want to take a chance on it. So anyway, thankfully we got out of there because this thing continued to push up. Had somebody ask me again when it got to 312 about re-entering, and I said, wait for 315. Okay, if you're going to play it, especially later in the day, whenever, they can get away with a lot more stuff, after the first 3 hours. So with that said, I encouraged them to wait to 315, and I actually sent out an order or an entry for 314 to 315 if you wanted to enter in that area. And we see that ultimately ended up pushing up to our 315 and the 3. Let me scroll over here so we can get to it. All right, so we got to close to our 314 here. They pull it back right back to 313, and then bam, they push through, they get to 315, and then they end up pulling it back close to 314. So again, I encourage ones whenever it pulled back close to, again, you got to realize that if this was earlier in the day, oh, I mean, I'd have been all about holding this thing for $2-3 drop. But considering we were getting close to the last hour of the day or right around the last hour of the day, hey, they can run and push stuff way more than you would ever expect in the last hour of the day. So we didn't. No, I encourage them, take your profit, get out of there, and move on about your day there. So anyway, and most times I don't even recommend trading, after the first 3 hours of the day. That's one of our rules that we have. But in certain situations where, yeah, I feel like it's a very, very, high probability money where I feel like it's almost free money if I don't take it. Yeah, I don't mind sending stuff like that out. But anyway, so with that said, they got the nice rejection there at 315, and like I said, pulled it back to 314, got out of there. So with that said, that was in phase. So I'm going to shut it down for in phase. With that said, when it comes to how do I find the stocks? So I want to show you how you can scan for these stocks. Like I said, it's not rocket science here. You go into Stock Screener on TradingView. Once you get into Stock Screener, you're just going to hit top gainers, okay, and then you're going to filter, set up your columns, okay. All you're worried about intraday is change from the open percent, change from the open dollar amount. Again, why are these important? Because this tells us the stocks that are, have the biggest change on it. So the biggest winners for the day, they have the most volume. They're rocking and rolling. So with that said, okay, so if you come here to the dollar gainers, you'll see where it was in phase. Number 2. Played this one as well for my personal trades. I didn't want to send this one out because this one had lower. The options on this were a little bit too spready for us. In phase had beautiful options. They looked a little wide when you first looked at them, but man, they were feeling within $5-10 of the bid. So we don't care what the spread is. If they're going to give us $5 to $10 from the bid side, yeah, I mean it's great. So with that said, this is how you scroll. And again, all you're gonna do is click on here and it's gonna show you the biggest percent gainers for the day, the biggest dollar gainers on this tab. And again, you'll just go through that list, ideally after about the first 15 minutes of the day, and you're gonna see, okay, what's moved really, really hard. And once you find something, you see it, okay, you look at the chart, okay, bam, this thing is pushed really, really hard. It looks like there's gonna be some easy pullback money. Throw it up on Bookmap, find out if it's close to the major liquidity. If it is, be ready for it. If it hasn't got there, just set you an alert. Once it gets within, $1.50 of that level, be ready to jump all over it. Because it's really fun playing it because it's the probabilities are exceptional. So anyway, so that's how you scan for the stocks in TradingView. Like I said, very simple there. A lot of people say, "Oh, what's the volume?" I don't need to know what the volume is because again, if it's on this list, the top 10, it's got plenty of volume. Okay, so I'm not worried about that. So we like to keep it very short and very simple, short and sweet and simple. Okay, so that takes care of that. Anyway, so that's the how you scan for the stocks. Also, to how you use our Bookmap strategy. Again, we use two of them on in phase today. We use the short, liquidity short at major liquidity, and then also to the push through strategy on major liquidity. So anyway, both of those worked out really, really nice. So that'll do it for this portion of the video. I'm going to go into the members portion now, just to go over some education on SPY and how we could have read SPY better today and taking advantage of that because we know SPY turns the market. So being able to understand and predict what SPY is likely to do is extremely beneficial. Now, of course, we always have Bookmap streaming through the day. And of course, we're always looking at the ES and the SPY liquidity. ES, of course, is preferable when it comes to looking at liquidity. So anyway, so we know what to look for there. We know the market wants to gravitate towards major liquidity. But whenever it comes to a lot of the nuances and the very precise entries and exits, our indicators from the indicator course are extremely valuable. So with that said, let's get into how we could have read SPY better today. All right, so first things first, I pointed it out. I've been pointing it out each morning. One thing to take a look at is the opening range break based on the 2-minute time frame here. So the 2-minute candle, very simple. Just to be able to get a bias, if you're trying to get a bias for the morning, or if you want to play a quick breakout, more power to you. If I'm going to play something within the first 20 minutes of the open, which more times than not, I do not recommend it. But if I am going to play something within the first 20 minutes of the open, I'm looking for something on a breakout on the 2-minute candle. So our first candle here, 2 minutes. So ideally here, you get a nice wide candle. It comes back into that candle, and then bam, blast above the candle. So when you see that, that's an indication breakout. They want to keep pushing it in one direction. I'll give you a prime example for yesterday morning. So you don't think that this is just just some hyperbole here. So again, we got one candle here to start the morning, 2-minute candle, big. It's a big one. Tell you what, let me for this, all we need is price action. All right, so candle here. All right, so again, I'm looking for a breakout inside of this candle. Okay, so I'm looking for, see what it's going to do when it breaks inside, or out, or rather outside of this candle in a direction. That's, I'm looking for the market to follow through on that, in that direction. So with that said, comes in here, finally get a nice break. It was right there at the 393, so I would like to have seen it got below that before the entry. So anyway, so inside 2-minute candle, chops around on the inside, bam, breaks out, and then you can see that they continue to push it down. Let me see what happened the day before that. Day before that, yeah, big candle, big opening candle there, 2-minute candle. What proceeds to happen? Yeah, they ideally it'd been nice to have seen them brought it inside the candle a little bit more and then broke it out. But from here, they just, they brought it back in a little bit and then continued it down there. So it was that nice $2. So anyway, so if you're just somebody that's loving, you just want to, play something quick at the open. Again, don't go big with this, and you got to be quick to take your stop. And again, where's your stop? Your stop's on the other side of the candle. So if you're playing here, you're starting to play continuation down here, your stop's up here. Okay, and the same thing with the day, this would have been yesterday. Same thing here. So you get in here, you play the break. Where's your stop? Above here, and you're playing in that direction. Same thing for today. Entry here, pull back into here, stop right here, play the breakout there. So with that said, what other things could we have picked up from today's trading? Let me throw the rest of our indicators back on there, get all of our algos so we can have a good idea of what we're looking at here. Okay, so one thing I pointed out this morning was definitely to expect in voice chat to look for them to pull it back. Once they blasted it up here, I told them it ain't a matter of if they are, it's when they are. They're going to pull it back into here because, again, this was major liquidity here. You had a major moving average, multiple major moving averages, a major VWAP, and 2 or 3 algos right in this area. So when they pushed through, I mean, like I said, it was guaranteed to come back and retest this area at some point. So which they did. They come through here. Now, another thing to pay attention to from the course is ignition candles. In the ignition portion of the course, I'll show you some indicators you can put on your chart to help visually point out to you when an ignition candle. A lot of people call them engulfing candles or bullish candle, whatever you want to call it. So anyway, so whenever you see this indicator, you know that there is a lot of money pouring into the market, and it's a good chance, depending on where it's at. Like I said, you get a very strong candle away from this moving average, I don't feel as confident about it. But if I get a nice one of these candles close to this moving average or after a hard V, okay, so in this case, what happens, comes down here, makes the V pattern, nice tight V pattern, gets that ignition, what we call the ignition candle. It's kind of like the rocket shift, ignition, lift off, bam. Okay, so prime example, I don't want to touch this, too far away, pulls back to it, nice candle there. And we know that whenever we play momentum based on these candles, we want to put our stop behind this candle. So if you're entering based on this ignition candle, comes down here, makes the V, ignition candle, you have to have your stop below it. That's your stop, just below that candle. Okay, same thing here, comes back, ignition candle, you stops just below that candle. And if you do that, you will stay very protected. So where's another instance? Okay, comes down, makes a V pattern, ignition candle here, stop loss just below it. Again, none of these would have hit your stop. All right, this one starts getting away, ignition candle, but it's too far away. I don't like when it's that. Again, I want to find ignition candles close to this, black moving average right here, or, it's market's falling really hard and it's making a V pattern. Yeah, way down. I don't mind if it's way away from it in that case, but again, when I'm looking for nice bullish, momentum engulfing candles, igniting candles, whatever you want to call it, yes, ideally, like I said, I want them to be pulling back, consolidating right around here, right around this moving average, or like I said, the market's falling hard and it makes a nice V bottom, gives me a nice ignition candle there, and I can do the same thing, enter there, stop loss just below. With that said, we had this was another key area here. We had 2 or 3 of our algos and a major moving average, so was not surprised to see it get to this level, chop around, struggle around, dump off of it, finally come back, get support, push up to the next algo, reject, finally gets on top of the algo support, ignition candle, and our next major area of algos up here, 397 to 398 in this area. We see that they pull it back. They finally get above, start getting above, getting ignition candles there, and then they end up pushing it all the way to 398. So with that said, we took advantage of this multiple times today. We were in at 394. We did take our break even on it because it was just too choppy in here. It pushed through multiple times. And anyway, we took the better to be safe than sorry route. So we took this off for break even right here at our 394 entry. Eventually ended up dumping down back into the 392. So that one hurt. We usually don't get usually don't get us like that, but better to be safe than sorry, because this is a situation could have very easily ran straight to 395. Now, with that said, we re-entered for 395. We did get our pullback close to 394, so nice winner there. And I did send another one out for 398. 398 today, and then we got multiple tests on that area, and we got our pullback 398. Yeah, this was the one right here. Yeah, this is when we hit it the first, got close to it the first time, right here on the top of this candle, and then from there it just dumped straight back down to 397. So quick dump on that one. So yeah, that was our 3 entries for the day. 394, took that one for break even to be safe, which if we hadn't, we'd have been nice winner on that one. 395, got that one, and 398. So both of those worked out really nice for us. But at the same time, if you would have wanted to play the momentum, again, there's nothing wrong with playing momentum. You just have to understand, if you're going to play momentum, make sure it's after the market's fallen hard, making a V, gives you an ignition. Again, this was a little version of it. Okay, gives you this nice tight V here, ignition, stop loss. And this, ideally you want to have it below the ignition, but when you make a V, it's always really better to have it just below the V. So where it makes the V right there. And then also to the other time is whenever it's trending. So in this prime example here, trending, pulls back, bam, ignition right here, stop loss just below there, and you're going to play the continuation up. So nothing wrong with playing the momentum. Somebody wants to take advantage of that, that's fine. But again, you have to keep your stop below the ignition candle. It's not a a loose stop. No, that's where it's at. That's where it's at, because the thing, like I've told people many times, when you lose, when they give up, when big money, because again, this is big money saying, hey, we are buying this thing, computers, big money. When they give up on that area, when they lose these ignition candles, that's when you can get a really quick dump really, really fast. So we don't want to mess around with that. Nope, not at all. What are some other things that you could have keyed in on today? Our major moving average here, this blue one right here, we know that when we get usually anywhere from $3 to $4 away from this moving average, we're going to start seeing pullbacks. The further you get away from this one, the more likely it is to pull back. So prime example here today, 390.50 it blasts up to, we'll just call it 393. So $2.50 right there that I got away, pulled back to it. Again, blast up again away from it, pulls back. Again, blast up, pulls back, ends up pulling really close to it here at this point of the day. They blast up, pull it back. So, it's one of those that anytime we start getting really overextended from this moving average, like I said, the pullback is not a matter of if, it's when. So yeah. Now, whenever you start getting it trending there, like I said, this is a great time to look for the market to continue to consolidate, push. Now, if it's flat, then yeah, more times than not, it really likes to get about anywhere from $2.50 to $4 away, pull back into that area, pull away, push away, pull back to it, that type of thing. So with that said, pretty much, textbook movement on our algos today. We see all of our, all these, if we went down to the 1 minute time frame, you'd see even more. But yeah, just really, just a really nice day. We did have one vertical breakout here. So that was, we had four or five of them yesterday, which we know that's by far the easiest, our easiest strategy for making money on the SPY. I'll take that strategy on the SPY ENS over. Yeah, that is the most powerful of them all. So with that said, I hope that helps you out there. If you have any questions, just feel free to ask me in the voice chat trading. And anyway, appreciate everybody's support. And like I said, just stay patient, keep learning, and always review after each day. Always go back and review, see where you could have taken advantage of the market better. And again, you're training yourself that where when you see it in the future, you'll be able to react to it. So, because again, it doesn't do you any good, if you look at this an hour, if you see it an hour later or even 10 minutes later and it's already happened, you need to be able to identify this stuff on the fly. So again, that's why having all the indicators from the Precision Indicator course, that's what it's designed to do. It is the, there's another course out there that'll do it. Hey, please send it to me. But yeah, when it comes to allowing you to predict what's likely to happen before it happens, this is the course. So anyway, hope that education helps you. And we'll see everyone tomorrow in voice chat trading.